Oh, there we go. All right, all right. We are back here today for preparing for Thursday. It's price action. We can kind of see how we've risen and risen and risen over the course of Asia. And yeah, I think this is going to be a pretty interesting next day. We've got quite a bit to take a look at, so let's go ahead and get started here today. Tomorrow, Thursday, we have 8:30 a.m. unemployment claims. We've seen unemployment claims spike pretty quickly. So we are going to keep an eye out for 8:30 a.m. and see where price takes us there. And from that point onwards, we will go see how the rest of the day goes. And I'm not going to be here from about 1:30 p.m. Eastern. I'm not going to be able to trade the afternoon session with you, so I will try to trade the morning session only. So let's take a look at the charts. So today we know we've risen up to this weekly imbalance, which we said on Sunday was going to be the draw on liquidity here. I still believe that we can draw up into here and then potentially retrace a little bit to end the week. Do we head up into this high here and this high? If we do, then it's going to be a very sharp increase and there's going to be a very sharp movement upwards. There are some people that think that we're going to hit that this week. I don't think so. I think we're going to touch this fair value gap and then head lower. But let's see. I mean, let's see how price reacts. We have a monthly bearish order block here, coupled with a weekly sell side imbalance. So for those reasons, I'm looking at price to kind of hold a bit. Taking a look at the, oops, what happened here? So taking a look at the weekly, we obviously can see our weekly expansion to the upside has occurred. And if we look at the daily, we see clearly that our days have done nothing but rip to the upside. So right now, we see that on the current day, we see price has gone up quite a bit. It opened at 16,774. Right now, this is a, let me make sure I'm on. So right now, this has, since open, skyrocketed quite a bit. So over, if we opened at 16,774 and the high is 16,885, that's quite a lot of movement from the opening till now. So hopefully for anyone who has been trading Asia session, if you see this type of signature on the day, that is something to remember for the future. How we have the 4-hour chart just skyrocketing and heading up towards that weekly premium Sibi low. I missed a large portion of that rise up because I was thinking that we would see an FOMC remove, like a retracement, little retracement lower, which we did end up getting eventually, but not until a bit later than expected. So 4-hour chart was still bullish. I mean, nothing here. We really didn't have too much of a movement lower. 60-minute chart, we had a tiny little blip here, and then we rocketed through the rest of the day. On the 15-minute chart, we can start to see how we didn't even pay attention to this breaker here. We just continued upwards on the 15-minute chart, came down into a fair value gap and continued. Price heads down, heads into a excuse me, heads into an inversion fair value gap that we see here, and finishes off the day with a high. What does that look like on the 5-minute? Well, we have a bullish order block. Hey, Kirk. Good evening. And we knew price needed to come down and retrace to what point? 50% or below. So we saw that retracement occur, and once that happened, we rode that back up into this sell side imbalance. And what has happened since then? It's rocketed up and onwards. Let's take a look at the 1 minute to see if there's anything we can see. On the 1 minute, we see that we had dropped down into that 5 minute inversion fair value gap. We saw displacement to the upside, return back here, inversion fair value gap again, or rather just a plain old buy side imbalance, sell side inefficiency, balanced price range there. So now we head higher, we headed back down into this bullish order block and held up to a imbalance here. And so now price has been efficiently delivered. There are some spots below here that are inefficient, but based on the open, there's a gap, a liquidity void now from the open, the close of yesterday to the open of today. And we can see that this whole evening was one that was very, very nice, excellent movement from the evening upwards, very slow, methodical movement to the upside. Very few times were you in fear for your life on movement up in case you took a long at certain key points here. Even if you took a late long, this was something that was bound to happen. Price keeps on spooling upwards. So what does that mean for London? Well, depends. If we hit our weekly objectives with this, then that becomes troublesome, right? If we hit our weekly objectives, that means we hit this within Asia. We're going to be... I got stopped out on that reversal by 6 ticks. Yeah, I know. I know how that feels. I got stopped out a lot today by just a few little ticks today. So I need to look back at stop management and go from there. Nothing that some review can't handle, but I do need to take some of those screenshots of the entries and exits so I could study them and see where I could have made it better. Today is a good day to study for sure. So outside of that, do we hit this weekly imbalance? And how quickly do we hit it? Do we hit this weekly imbalance and then what happens then, right? So we're going to drag this out a little bit over time. We are going to look for the midpoint here and the bearish order block on the monthly. So there's a monthly intermediate term high down here. We're now at a bearish order block on the monthly. So we blew through the weekly bearish order block here. Technically, we did see a little bit of a reaction there, but we traded to the top of that sell side imbalance on the daily chart. So you see how we traded down through that, and now we've traded up to that, up through that daily imbalance. So you can see how we traded back down to that daily imbalance, immediately rebalanced, and then headed back upwards. So, yeah, exactly. You're an inspiration. Yep. No, that's what we have to do. We have to stay positive about these things, right? There's always going to be another play at the end of the day. And as long as we're not risking too much, we can always make it back. So that being said, we are going to now take a look at, we're going to take a look at the 1 minute time frame on today's price action. FOMC, we should have considered that, hey, once we traded down to the real-time hour liquidity void, we were starting to see some movement higher. Nothing that constituted as displacement, but it does look like had we entered there, we would have been fine for FOMC. I don't like holding for FOMC very much, but this is good to note. This is really, really good to note that some people started front running it, right? I wouldn't trade ahead of FOMC necessarily, but there are some things that could have led to a potential future analysis here. And I just don't want to be trading before news. That's just a generally bad habit, and definitely don't want to do that. So, but yeah, this I called out during the middle of the day, and at about, let's see, this would be what, 3:30, we saw this reversal heading into the end of the day. Boom, right there. So our bias was correct. We were fortunate enough to stake out this bias here. Had we bought below the 12 o'clock open, we would have been fine. So we're going to do that same consideration for the Asia range on Thursday. Depending on how high we go, if we hit this weekly imbalance, then I don't know where we're going to go. We could go up, we could go down. It's going to be really much tougher to tell. If we don't hit it, well, then we know where we're going to go. We know we're going to go try and tag that weekly premium Sibi low and potentially that monthly bearish order block, right? So I thought I just moved this. That's weird. Very strange. So yeah, that's what we're going to be looking for on our charts. And really, that's it. There's nothing else that we... Let's see if I can find our... It's this one here. So that is it on our charts here. Let's take a closer look at some of those key inflection points today on a lower time frame, though. So 30 seconds, FOMC, nothing really there, too much time. On the 30-second chart, we saw, at this point, we saw a short-term high, displacement, fair value gap. We could have probably entered here, and that would have been a fantastic entry to head higher. So that's on the 30-second chart. What did that look like on a 5-second chart? Here we go. So we didn't have a short-term high taken out here. We do have displacement, though. So with that, we might have considered this to be a long here, aiming for here. There wasn't really much there, though. Let's see. We need to go to 1431. Here we go. So what does this look like on a 1-second chart? Well, we have short-term high here, short-term high here, short-term high here. Then we see displacement above. Boom. Continued movement above. Return to bullish order block, and then high here. So these lower time frames wouldn't have made a lot of sense. 1 minute time frame was sufficient enough. A break, displacement above, short-term high to head higher into our close. So tomorrow we need to see how does this range work. What happens in this range now? If we have something like this, this is the range of Asia, potentially. And let's see, really truly the Asia range starts here. And boom, we have our Asia range right now. So this should show up on our 15-minute now. And we need to see, do we trade above it and then Judah swing lower and then head higher? Or do we trade below it, then Judah swing higher and then head higher? Hey, Johnny, can you look in a tick chart just for shits and giggles? Don't know what that is. So probably not, Kirk. I don't trade the tick chart. I know that's something that my colleagues do. A lot of people do that. I don't. But if you do, feel free to feel free to check that out. I just don't use the tick chart, and nor do I know how to use it. It's not something that ICT teaches. It's not something that I look into. But I have friends that use the tick chart religiously and do very well for themselves on it. Their charts are very, very messy though. So let's see. So that's it for that time frame there. We are going to maintain and watch this Asia range. We're going to remove some of these areas here because we've already referred to them, and probably don't need to use them right for this time being. And we'll keep the bearish order block there. We don't need this consequent encroachment yet anymore. We can get rid of this bullish breaker as well, and these midpoints there. Okay. And then we want to move this up as well. So we have a midpoint here, and that midpoint's roughly around here. So we'll keep that. We'll keep that here. And we'll watch this over London. We need to see if we are going to take a dip, come attack this liquidity void in either London or New York, and then head over to once New York happens, once London happens, if we're going to head higher, we need to see us come down and attack this bullish order block here on the hourly where we dropped at the end of the day, and we need to see us come down and attack that buy side imbalance there. So we can put this up here as an example. And that will serve as an hourly fair value gap to be cognizant of. We have a bullish order block coupled with a buy side imbalance, sell side inefficiency. So that's what we're going to kind of look for, with the consideration of a fair value gap, not fair value gap, a liquidity void beneath us where price did not trade to at all. So price, for this to become balanced, price would need two legs through it. We would need a leg down and a leg back up through it. So with this bullish order block being here and our weekly expansion being potentially concluded once we hit this weekly premium SIBI low, if we see London hit this, we are going to be in a pretty poor place to take anything higher. It can, but immediately at any one of these levels, price could reject and people could start to come in and secure some of the longs that they've taken so far. There's a lot of people that have made a lot of money on this run up. So there's going to be people that are profit taking, and we want to be aware of that, so that we can also try to pair what we can with key levels that are there. But again, just tomorrow we're going to have to stay a little bit more nimble if we reach the weekly before London and before New York. Yeah, that's really it for tomorrow. There's no major like, do we expect price to retrace all the way back down to this hourly fair value gap? Possibly. If we see a very, very red reversal day, then we can certainly see that. And we've seen those after FOMC as well. So that's what we're looking for tomorrow. I'll update this tomorrow to see a little bit closer to the time of trade what happened in Asia and London. So all these other items here, these can be referred to, but not traded to yet. And I think that might be it. Yeah, I think that's it for today. Pretty short session today. There's nothing crazy going on here. I need to be able to get to sleep so I can wake up early and trade. But if we take a look at dollar, one of those last things, if we take a look at dollar, we see that on dollar, on the dollar for the day, we knew that we were bearish dollar and aiming for this short-term low here. Now this can be a relative equal low as well. Let me push this all the way down here. So this item here, this could serve, there's probably relative equal lows on a lower time frame here, but this can serve as a rejection block. It's not serving as a rejection block currently, as we see price kind of start to consolidate up in that Asia range. But we knew we wanted to reach this area. Now, what happens at that area? Do we continue downwards? Is there liquidity to be taken? Maybe to the midway point of this wick? Maybe these relative equal lows? So there's certainly liquidity which can be taken in the dollar index, but what can happen when we head down there, right? Do we head even further down? I mean, it's really tough to answer these questions. Right now, we are in the middle of another market maker sell model, and we're in the middle of distribution here. So we're going to keep an eye on dollar. E-mini, we know that E-mini, we're looking for divergences here, and we actually don't see any across these. 30-year yields. So we have 30-year. Oh wait, I was wondering where my annotations were. Here we go. That's what I want to see. So now ES, the red, has shown a little higher high. NASDAQ also shown a higher high. Dow has shown a higher high. There's no SMT divergence here. There was one yesterday, 12.6, but was not one today. From a yield perspective, yields down means indices up to generally. Rates, basically treasury notes up is when yields are down. So that makes sense. And I think that is all we really look at. Oil has broken below its weekly discount buy side imbalance, steadily approaching these relative equal lows here. And yeah, I think that is it for today. We looked at dollar, we looked at bonds, we looked at, yields, and then we looked at some of the treasury notes. And that's really all we look at. Okay, so we'll keep this one short, just a little under 30 minutes today. Nothing too crazy. We reviewed this at the end of the day, so apologies if this went a little bit fast, but tomorrow we need to see how London goes. We know that although the weekly expansion is to the upside, we've hit an objective already, and we need to now determine if we want to have a different type of movement for the chart. We need to see what is the price willing to give us. Is it giving us a Judas swing to the downside before we head higher and hit out those weekly highs? Or are we hitting the highs and no longer getting or are we hitting the highs and we're just not really able to capitalize on that? So it really depends. So tomorrow we'll watch London, we'll watch Asia, we'll watch the fair value gap that we pointed out, we'll watch that bullish order block, and we're going to watch a higher time frame to see what kind of key levels form during that time. Okay? That's it for today. Short, sweet, concise. We are of the impression that we will continue to head higher as long as as long as we are able to withhold this Asia range, I think it could be possible that we head higher. So, all right, I am tired as hell. I'm starting to swoon a bit. So I'm going to call it a night here, and we'll catch up at bright and early in the morning, and we'll trade some more tomorrow morning as we have that day off, but only in the morning. So we will only be trading in the morning, and the second half of the day is going to be recording. So with that, I'm going to call it a night. And Ken, thanks for joining as well. We'll see how London plays out, see if London breaks this range or not, see if it happens to reach up into this area, if possibly could. But we aren't going to wait for midnight open before we do anything above or below that. So with that, have a great evening. We'll catch up some more tomorrow. Get some rest. Stay hydrated. We'll talk soon. See you later.